So let's dive straight in. Trillions wiped off the table, and the stakes could not be higher for regional and global investors today. I'm very pleased to say that Ben Powell is here. He's Middle East and APAC Chief Investment Strategist at Blackrock, which is also marking the launch of its brand new Abu Dhabi office right here in ADGM today. Ben, so good to see you around the desk. Welcome to the program and welcome to Abu Dhabi.
Great to be here. Storms in the market, but always sunny and calm in Abu Dhabi. So it's a pleasure to be here. And of course, Blackrock, we're very excited about our prospects here over the medium term. Shorter term, market story is going to dominate, I think.
Indeed. It's so good to have you here, especially on such a big market day. So let's dive straight into the headlines here. Trillions have already been wiped out. We've just come through the worst week for the S&P since the pandemic. What's your read on this? Is this market panic or is this a rational repricing of policy risk underway?
I think it's a reasonable response. We have to acknowledge collectively within the market that we underappreciated the Trump administration's determination to keep their promises. I don't think we can say we weren't told repeatedly, and actually I was reminding myself of President Trump took out an advertisement in the New York Times back in 1987 where approximately he laid out the trade policy, his beliefs that trade deficits are kind of a moral wrong. So he's been extremely intellectually consistent over the last 30 or 40 years, and he is now acting in strong accord with that, with his intellectual frame and with what he believes he was voted in to do. So I think the market is now waking up to his sincerity, his determination and his conviction to keep going, even as he said, even if that medicine is slightly distasteful, at least in the short term for markets.
Indeed. So you really do get the sense at this juncture, right here, right now, that policy uncertainty is going to continue to drive the trade. So how much volatility should we expect, and how much further will stocks sink at this point?
So I'd expect more volatility. I think the uncertainty potentially could bleed into other areas. So I think if we're learning from President Trump that he really means it and he's determined, then that has potentially quite interesting implications for other areas, including foreign policy, including his approach to maybe more aggressive deportations and so forth. So it seems to me reasonable if he's being maximal in the trade area. Could that bleed into other areas? Why not? So that's something that the market needs to be thoughtful around. And then also there's going to be a positioning problem, I guess, over the next several days, where whether you like it or not, if you're a bit long and you're levered in particular, you're probably going to be unwinding positions. So you have the fundamentals, you also have the technicals. They're going to feed on each other, I would have thought, over the next several days. So I think it's going to continue to be choppy, at least for the next several days.
I flagged earlier that US equity futures are also pulling significantly lower here, but there has been talk that we could be on track for an 87 Black Monday style crash when Wall Street opens later. Is that your view?
I don't think that's our view. It's a Monday maelstrom, and I think it is going to be choppy for these next several days. I would suggest that we remain relatively calm. We need to reflect the new reality, that's for sure, but there's still much to like in the world. There's still amazing kind of positive tailwinds around AI and other things I won't go into for now, but we need to not lose sight of that. So we need to be appropriately risk-averse in both directions. Many things to worry about, but there are also significant tailwinds. So this isn't a time to throw the baby out with the bathwater. Focus on what you really like, and depending on your own personal kind of investment characteristics, carefully look to think about where we can dip toes in. But today I think volatility will certainly continue.
So let's talk about the investment strategy, because you've been overweight US equities. Does that change now?
It does. So we take our US equity view down to neutral, actually. And what we do in particular is we really shorten our investment horizon. So we're really, I think, in the very, very short term kind of hunkering down and looking for these opportunities. So, you know, cash is, how can I say, it has an opportunity value. So if you have cash, you have the ability to wait somewhat patiently and then think about, as we see, potentially the sell-off become a little bit more indiscriminate over the next several days. As you see risk officers take control of portfolios, you see a positioning kind of shrinking. That means there will be some kind of sell-off of assets that probably don't deserve it as much. So that is opportunity. So we shrink our investment horizon to a much kind of shorter term duration, hunker down a bit, favor cash, take the US down to neutral. But again, I want to stress this point of that's not excessively bearish. There are still many things to be positive about the AI Megaforce and others. So if we can, over the next several days, think about where we want to pick our spots. On that, though, it's very important. We do think it's a very different market environment. The days of kind of just being so-called risk-on, just having a very broad kind of beta exposure to the markets and then not touching it, we think those are over. It's a much more complicated, fractured geopolitical economic landscape. So as investors, we're going to have to be much more granular, much more picky in exactly what we want in the book. And maybe over the next few days, we're going to have the opportunity to pick up a few of those bits and pieces at discount valuations.
Of course, the value creation is quite significant here as well. Just with regards to the macro, what's your current read on how significant of an impact these tariffs are going to have on growth and particularly on inflation, which is another risk for investors here?
And you've got to talk about both, right? So I think the market reasonably has been very focused on the growth shock over the last few days, and fair enough, right? So sort of inconveniencing the global trading system, the potential for retaliation, for sure, very growth negative, and that's kind of very, very important. But it is also inconvenient for inflation, so you can have growth down, inflation up. And that's very tricky for central banks. So over the last 20 or 30 years, we've really had a central bank put. And almost at the first sign of trouble, growth or market, the Fed has been able to ride to the rescue and play the role of kind of superhero. That's much more difficult now. And Chair Powell, I thought, gave a very interesting speech at the back end of last week where he said, we have a mandate. It's not called optional, right? It's mandatory that they have to care about inflation. Inflation is already kind of too high, and tariffs should push that higher. So it's much more complicated, and it is unlikely in our assessment at Blackrock that the Fed can kind of come in and save the day as easily as they were over the last 20, 30 years.
Okay, because the speculation is that the Fed needs to cut rates now to mitigate the fallout here. Why not open the discount window?
They feel they don't need to. So for now, Fed that's always said or recently said they're data dependent, the hard data is actually pretty good, right? So NFP, the jobs report on Friday, was actually quite strong. And so as we look at the hard data today, there isn't much in there to suggest that we have an economic issue. Clearly, the market is looking forward, as are various confidence surveys and so forth, thinking that's going to roll over quite quickly. But I think the Powell Fed and the economists working there will be waiting to see a little bit, as we all are, I guess, how's it going to play out this week. So they don't want to pre-commit themselves to a dramatic, potentially historic course of action before they're really, really sure they need to. And my sense, Dan, is they're not quite there yet.
Is a recession inevitable in the United States, though?
I think inevitable is too strong. I think the probabilities of a bad outcome, a stagflationary outcome, have clearly gone up over the last 72 hours or whatever it's been.
Okay. Ben, stick around with us. We're going to continue the conversation on the other side of this break. We're, of course, going to talk about oil and what else is happening in this part of the world as well. So I'm so happy you're here. Really important market day, of course. And do stay with us on the program. We have more news, more analysis coming up for you. You can also follow our CNBC live blog for all of the market developments and updates that you need in this market turmoil. Stay with us. Access Middle East live from Abu Dhabi. Back in 2 minutes.